Welcome back. You're still tuned into Midcap Radar. The stock on our radar is Mahindra Lifespaces. There was an operationally weak quarter. Bookings declined sequentially and on a YOY basis. If you look at the numbers, the booking number has seen a decline of 61% sequentially, 12.5% on a YOY basis to come in at around 400 crore rupees. But the long-term targets remain intact for the company. We have Amit Kumar Sinha, the Managing Director and CEO at the company, joining in now to take a few questions. Mr. Sinha, good afternoon. Thank you for joining in. Well, first, what explains the decline that we've seen in the bookings on a sequential and on a YOY basis? And for the rest of the fiscal, what kind of quarterly run rate are you looking at? Almost 1,400 crore rupees in the first half. Is 3,000 crore rupees on the cards in FY25?
Yeah, thank you for having me. I think let me just answer your questions quickly. First part, if you look at the quarterly seasonality in the business, quarter two tends to be much lower. So a sequential quarter may not be the best way to look at the market in terms of the sales number. But you combine first quarter and second quarter, as you said, H1 for this financial year is almost 80% higher than the last financial year H1. So we had a tremendous growth that we saw in the H1 period between the two. Quarter two, seasonality, rains, there are Shraddh and many other religious reasons why people tend to not buy, and that's an industry-specific phenomenon. But going forward, we have a lot of exciting launches planned in quarter three, quarter four, which tends to be, from a seasonality and from a purchase decision point to be very healthy season. And we had a similar performance last financial year. We hope to actually continue the momentum that we have seen on the first half with a similarly exciting set of launches in Mumbai, Pune, Bangalore, even Jaipur, which will help us make a very exciting close to the financial year in H2.
Mr. Sinha, when you're talking about the bookings, both year-on-year sequentially, like you mentioned, there's been a bit of a dip. Now, you've given us a very strong guidance in terms of the development value, the GDV, you're seeing it at over 45,000 crore. You've also given a guidance in terms of the achievable cash flows at over 6,000 crore rupees. By when and how will you be able to achieve this, especially given that there have been a few execution delays you've faced in some of the projects?
Yeah, so let me just highlight, I think you touched upon a very important point, Vivek, about the cash flow. This is a business where cash flows are extremely important. And just for reference, this financial year, H1, our cash flows more than doubled. So we had roughly 550 crores of cash flows, free cash flows in H1 compared to half the number in the last financial year for the same H1 period. So it's a very healthy cash flow. And this cash flow will get deployed in buying land or doing joint development agreements for our future GDVs. Of the 45,000 crore that you see I've given in terms of what we need to achieve, half of that we already have in our portfolio. Roughly 20,000 is we already have. Thane being a big part of that story, and hopefully approval process, etc., are very time consuming in Thane, Mumbai. But I think we have a very healthy pipeline of GDV already. With the cash flow that we will have this financial year, as well as some of the equity and platform partnership that we are looking at, a very healthy debt to equity ratio, a very strong industrial business that generates a lot of cash flows for us. And we have a strong, probably the largest business that we have in the industrial side. These things will help us adjust the cash flow required for us to achieve our 45,000 aspirations. So we are on track. I don't see any major issues in terms of us achieving our long-term aspiration.
Mr. Sinha, you do have a 7,000 crore funding plan. By when do you have that plan? Will it be via the QIP route, or will you also look at tapping markets for debt? What is the current absolute debt number?
So this is 5-year plan. So when we launched this, our strategy focus on key segments, key market, we also did a financial analysis and what kind of aspirations we have. So 8 to 10,000 crore is our aspiration. That was 5 times our 2023 numbers. That's what we are planning for. And the avenues that you talked about in terms of funding, all the things that you mentioned are absolutely true. We're looking at everything. We have a strong cash flow from our internal accruals. And many launches that have done really well for us in the first half will give us a lot of cash flow. We will also have as I mentioned, we already have a very healthy debt to equity. So we have the opportunity to push that. We'll still be very conservative given our group heritage and philosophy. We will also be doing equity partnerships, and those platform partnerships are underway in terms of discussion, negotiation. Hopefully, we'll close them in the next few days. So all of these will contribute to the cash requirement that's needed to achieve our aspirations.
Okay, thank you so much for joining us. Thank you so much for throwing light on the numbers and the way forward. Let's now slip into a short break. Up next, we will connect with Sanjeev Goenka, Chairman at First Source Solutions, to discuss their Q2 numbers. Stay tuned.